Welcome back to 7-Minute Options on Friday, January 7th. Looking to put on all kinds of positions today. All right, so starting off with GDX. This is the gold miners ETF, and there's a lot of plays I like to do in here, from iron condors to strangles, but today the IVR is above 25. I'm going to put on a strangle today, and so I like to go to the 20 delta thereabouts. There is no 20 delta here, so I'm going to go 24, which is on the closer side of 20, and here I'm going to go to the 19 delta and 28.33. I got $76 in credit, so I'm just going to put that one on. $398 of buying power reduction, and I got 2 theta, so I'm getting about a theta for every $200 here. Absolutely fantastic. And yeah, I like where this is going to go. I'm going to put this one on. All right, the next one I'm looking at here is EWZ. That is the Brazil ETF, 40 days away. So here's same thing here. I like to go to the 20 deltas. So I got the 22 delta on the put side, the 19 delta on the call side. That's as close as I can get there to the 2020. And yeah, 42 days away. Perfect. I pick up 2 theta for $319 of buying power reduction, picking up $75 in credit. So yeah, let me route that one. And as soon as that one gets filled, I'll put on the GTC order. And then the other one is Palantir. So I'm going to try to lower my cost basis in Palantir. So I got the 100 shares in Palantir that I picked up for $23. Palantir is down to 16. It's kind of hard to believe, but that's where it is now. Yeah, so actually Palantir would have been like this would be really good to sell more premium against this one. When it's going sideways like this, that's ideal for selling premium, but obviously we are still below our share purchase price. So I'd like to either lower my cost basis or wait till the stock goes up. But as it goes up, I want to make some more money. So what I'm going to do is I'm going to sell a put against it. So just after earnings, 42 days away. For example, if right now we're trading at 1650, if I go out to the, let's see, 14 strike, I give up $574 buying power. I get 1.3 theta, which is not too bad. And I like to go for about $300 for every theta. So this is right around that range. It's not too far off. So if Palantir has a bit of a further meltdown, then you know what? Maybe I'll just pick up the shares at 14. And if Palantir kind of moves back up, then I can exit out of this position quickly and collect some profits. And if it just goes sideways, I'll still collect it as well. But it's pretty good. $55 in 40 days. That's roughly a 10% return on a $574 investment in 40 days. So I'll take it. So I feel like long term, I believe in Palantir. So even if I pick up those shares, I'll be okay because they'll lower my cost basis on the other 100 that I picked up at $23. So there's no point putting on a GTC order there. I'm perfectly happy holding that to expiration and getting assigned if I get challenged. All right, what's going on here? EWZ. Lower my price by $1, and it does. Okay, got filled right away. So EWZ, let's put down the 50% GTC order right now. Close the position. So 74. Let's try to buy it back for. If I put $36, then yeah, that's 72, and then it'll cover the $2 transaction cost. GTC for 36. Yeah, let's do it. All right, let's look at the GDX. It's at 75 right now. I got 76. All right, 74. Does that fill at 74? It does. Perfect. Actually, it filled at 76. Fantastic. All right, put on the GTC order right now. Close the position. Same thing, 38. I'll go 36 just to cover the. Yeah, let's go 37. It'll give me $74 plus the $2 transaction costs. Let's move this window out of the way. Here we go. Review and send. GTC. Perfect. Another one I picked up earlier today. It's a bit of a gamble. So Rivian, Joby. Yeah, I can't seem to roll that Joby position. It's so weird. It's just the bid-ask spread is too wide. So even though the midpoint is at 10 and I'm only asking for 3, I can't get it filled. It's just the bid-ask spread there is too wide, which is a bit annoying. That one expires in like 14 days, so I'm just waiting to roll that over. But yeah, the Rivian. So I put this one on today. Actually, this one is a bullish position. So I bought the 90 put, sold the 85 put. So it's a $5 wide put spread. I paid $293 for it. I'm expecting it to go down a little bit. If I look at Rivian, I mean, the stock's kind of exploded as soon as it went public. Went up to 178 before it pulled back, and now it's been declining steadily. And in reality, I mean, there's no way anybody can justify the $5 billion valuation that it has. And I mean, I can get into the numbers, but essentially they have $55,000 trucks on back order right now. They said that they can't deliver those for the next year and a half, maybe 2 years. They're looking at something like 2023 delivery date on those. And even if they deliver those, you know, production is always hell. So ramping up production, just ask Elon, just ask anybody who's in production and manufacturing. It's a challenge. So it's very difficult to justify the $75 billion market cap on this stock. So I'm expecting it to pull back a little bit. And I also like to put this on because this is a bearish position. So if the market does have a bit of a pullback, then these speculative stocks are the first ones to go down, just like we saw with Peloton about 2-3 months ago. Yeah, these kind of speculative stocks are usually the first ones that investors flee from. So I'm hoping for a bit of a pullback. If this pulls below 85, I'm hoping to exit out of this for 475 in the next 2-3 weeks. Again, 42 days to expiration. And actually, this is already in the money. So it's a 90 to 85 put spread. It's at 85.60 right now. There's $157 of extrinsic value in there already. So in reality, 90 minus the 293 I paid for it. So it's right around 87 is my break even. So I'm already doing well, right? I'm already past my break even on the good side of it. So I just need to wait, hope that Rivian doesn't go up. Now, the thing with the Rivian is it is extremely volatile. Even just today, I was looking at it, it fluctuated between 81 and like 89 today. So it has huge swings, but I do believe that it is on the bit of a downside. Again, this is not investment advice. This is just me talking my usual BS, but I do believe this is going to pull back and it is going to close below 85 bucks over the next 2-3 weeks, in which case I can exit. I mean, I'd like to push this to 475, but even if I can exit at 388 and pick up like $100 or whatever, 120 bucks, I'll take it. So we'll see where that goes. But that's kind of where we are today. Yeah, I'm not sure. It's frustrating to not be able to close Joby out. I'd like to roll it out, but whatever. It's there. Actually, speaking of Joby, where's Joby now? It's at 629, and I was looking at Joby. The problem with Joby is there's very few strikes here, and there is very little premium. So even though the IV rank is 69, if I want to sell a $5 put, I pick up 10 cents in credit. Like, what's the point? I mean, for $240 buying power, to pick up 10 bucks, like what? It's pointless. And then there's the bid ask spread of 10 to 25, again, pointless. So at this point, it's like if I want to buy more shares, I should just buy more shares because I can't really use options to play that game like I do with Fubo and Palantir, where I pick up reasonable and significant amount of credit. So that's where we are today. Still have $2,700 buying power. I'm really anxious. I want to push that buying power and buy stuff, but at the same time, I realize that it's always good to have a little bit of buying power in case there's a bit of a pullback. So those are the positions I opened today. All right. Enjoy the weekend. Thanks. Bye.